Hi there, and welcome to the MITA Deep Dive Express Module number 13, Accounting and Taxes. My name is Jeff Tice. I'll be your moderator today, and we've got a couple of fantastic participants on the panel, and we're going to learn a lot of exciting things about accounting and taxes. And we'll get to our two guests in just a moment. First, by way of introduction, as I said, I'm Jeff Tice. I'm a CPA also. So today we have that unique opportunity to have three CPAs all in one room and be able to learn some great things. I entered the cannabis business in 2011, completed an application very similar to what you're thinking about today, submitted it, and the lucky lotto ball came up, and I opened a dispensary with my partnership team in multiple sites and experienced a lot of the things that you're thinking about right now. And even as a CPA, I would say, even with my experience with taxes, with accounting, often I had to go to outside accounting firms such as the Beech Fleischmann and Frost, as we'll have on our discussion today, because nobody can know everything. It's somewhat like your doctor sometimes, is that you go to your family practitioner, and then if you have something a little more technical, you go to somebody else. Or sometimes you can go to a physician group, which is very similar to some of the accounting firms, and receive all the services in one place. So having said that, let me introduce our panelists and get an understanding a little bit of their firm and their services, and what's offered and when and where. Perhaps as we move along in the panel today, we'll discover when we should give them a call and how attentive we should be to accounting and taxes. But Curtis, let me start with you for a moment. If you'd give us an introduction and a little bit about your firm and your cannabis experience.
Sure. Thank you, Jeff. Yes, my name is Curtis Winar, and I'm a partner with Frost PLLC in the doing strategic services, but also the cannabis industry practice leader. Like Jeff, I started entering into the cannabis business in late 2011 out of Colorado. Have worked with a number of companies, from individual dispensaries to fully operational, full vertical operations in Colorado, helping them grow to some of the largest operations in Colorado. Since that time, we've expanded to clients in over 16 states. Right now, clients that have expanded their operations in states, and new clients that have come about. Frost offers services, the full accounting services, from client accounting services, tax, structuring advice, audits, and going into cost segregations and litigation as well. I do a lot of litigation and business valuation, and we do a lot of M&A work as well. So we operate everywhere, and we have 2 offices in Arizona.
Nice. I just want to add on, thank you, Curtis. For everyone listening, an audit is required if you have a license, and knowing a good accounting firm, and more importantly, as you'll find out with Joe and Curtis and myself, really, it's important to know that they've got some experience in cannabis, because it's unique. It's not like any other business, and there's lots of rules and interesting regulations. So as you're evaluating the accounting firm or the accountants or your need for services, please consider the CPA's background and experience in cannabis. Joe, tell us about Beech Fleischmann.
Sure. Thanks, Jeff, for having me, and thank you to MITA for allowing us to put on this presentation. And Curtis, it's great to see you again. I'm Josephine Giordano. I'm with Beech Fleischmann. I'm a director in the Financial Forensic and Business Valuation Group, and I'm also the National Cannabis Task Force leader. We provide services to many industries, but our group focuses on the cannabis industry throughout the US. We provide tax, audit, valuation, litigation support, merger and acquisitions, turnaround management, restructuring, basically a full service accounting firm. We're one of Arizona's largest locally owned CPA firms. And we do a lot of work here in Arizona. So thank you for having me. I started out in the industry probably around 2016. Started out as a forensic examination where I had some investors come to me and say, hey, we invested millions of dollars a year and a half ago, and we haven't heard a peep out of the group that we gave the money to. So, which was a little shocking for me at the time, but that was a great experience, and just seeing and reviewing information, financial information and the lack thereof, and understanding how the structure works. And we started from there, and then I worked my way into merger and acquisitions and business valuation, which is a challenge, of course. And I work a lot with the legal community. I'm the chairperson of the Arizona Society of CPAs cannabis section. And I'm also on the education advisory board for the Association of Commercial Cannabis Experts. So I have quite a bit of cannabis experience. Thank you.
Thank you. You know, that's very important, again, as if you listen, that experience, not only in cannabis, but also a broad business experience, different kinds of businesses and situations, is very important for everyone as you're looking around for your accounting firm. I like to think of your accounting firm really as your most trusted business advisor. In other words, they have to hear the good and the bad, and can help you to work through some decisions, thought process, things such as that. An interesting term that Joe used was forensics. And if you're familiar with the forensic files or some of those cable shows, it's really similar in that the forensic accountant is looking at the fingerprints, if you will, the minute detail and potential evidence that would be needed in a bad situation. For the most part, you probably don't want those services, because that means, you know, maybe there's some problems. But what's very important, again, as you're selecting an accounting firm, is you look at not only that experience, but Joe, you said the other important term, Arizona, or as we call a local firm. You're both local firms in that there are national that are just gigantic. And we say a local firm now, they have clients and services in many, many states, but the accounting firms tend to be a little bit smaller. Joe, you were mentioning your client relationships and why you like being in a smaller firm and the ability to help potential clients. Could you talk about that for a moment?
Sure. I mean, I have very in non-litigation type matters where we're more consulting, and I do a lot of consulting for operators in the industry. You know, I'm a hands-on kind of person. I've done a lot of running of businesses through court appointments, and particularly healthcare industry, restaurant industry. So I'm familiar with day-to-day operations, and I'm also an insolvency advisor. So basically I provide turnaround services. So when we were going through, you know, the height of COVID, there were a lot of businesses, not just ones in the cannabis industry, but businesses obviously throughout, that dealt with a lot of distress. And as part of my background, you know, I like to physically go into an operation and really evaluate how we can turn a process around if you're struggling, and how to overcome the challenges operationally and financially. So, you know, that's the benefit of having local representation of an accounting firm, is that they can be there if you need them to be, or they could be a phone call away if you need them to be.
Nice, nice. Curtis, how's being in a I'll call it a smaller firm. You guys are pretty large by local standards in Arizona. How does that personal connection with the client work for you?
Well, I would agree with Josephine. Do you go by Josephine or Joe?
Either one, either one's
I always
fine.
called you Joe. So
That's fine.
but it's nice, a face-to-face personal conversation is certainly beneficial. I can't tell you how many times. I mean, my cell phone is what is my main phone, and all my clients can reach out to me any day of the week. I will pick up the phone or work through texts 7 days a week. There's some point, and having that relationship with the client is really important, because there's things that come up, especially in accounting matters or tax matters, that it's right on their mind at that time. And many of these businesses, and if you're running your own business, whether it's big or small, there's so many things on your plate right away. And I know at that time too, that something can get out of your mindset at the time, to be able to just send a text and, hey, can you answer this real quick, or something is truly beneficial. And being able to be there if you need to is a huge benefit, and something I enjoy doing with my clients.
To me, it's kind of like, when you go in a big department store, you have a hard time finding someone. They have the services, they have the product, if you will, but then when you go into a boutique store, that owner or that business person tends to give you a very personalized treatment. And I think that's
yeah. And Jeff, like you were talking earlier, unlike, well, it can be with an attorney, but your accountant is really a partner.
Yeah.
And you're there advising them on an ongoing basis many times. Not all the time. It depends on what the client's needs are, but you are their partner. You work with them, you work for them, and you try to make sure that you keep things as smooth as possible. There's a lot of intricacies to that.
So let me ask
too,
go ahead,
Jeff, I was
Jeff.
going to just say, stereotypically people think of CPAs that, we do your taxes and we're done. It's so far from that. I mean, we truly are consultants. I mean, we're there to strategize. We're part of planning on a startup. We're part of the exit planning and how to get out of the business, how to sell the business. How do we increase the value of your business so that we can optimize the value, for sale? How do we strategize correctly, with respect to tax strategies, particularly in this industry? How do we create a strong environment of controls so that you mitigate any risk or losses that are prevalent in this industry? So we do a lot. And it's more than just doing your taxes the way the stereotype is known.
Isn't that the case? I don't do taxes, by the way, and that's important, especially my own. They're too complicated, and not that I've got this or that, but the tax laws change too quickly, and in order to focus in on that and to be able to take advantage of them, I can't stress enough to use an accounting firm where they have a tax department that is focused on these laws and regulations on an ongoing basis.
Absolutely. This is very important to have an accountant that has practical experience, that is watching the laws. This is what they focus on. It's how you develop your strategies for your tax reporting. It's also planning on knowing what is appropriate and what's not. It's an ever-changing, fluid law right now. So I would agree with you, Jeff.
So everybody says, in general, the advisors, you're thinking about forming a business, and we've heard on some of the MITA panels, when you're going to think about starting a business, get a good lawyer and get a good CPA. So what is a good CPA? How's that for a question? Curtis, I'll start with you.
Oh, great. You're starting with me.
Thank you.
What is a good CPA? I think a good CPA can understand structuring, can understand the practical side of the business, and is there to listen and also take in what your individual circumstances are, your individual goals, because there is not one rule that fits all necessarily. There are certain rules that may be more applicable than others, but there are choices a lot of times. It's not a black and white. There's some gray areas there too. And whether you're in Arizona or another state, when somebody's looking in this industry and they're looking at how to strategize for their accounting and tax and that sort of thing, if they are really just looking at what they read around the country online and look at general rules, I would say be careful of that, because how you might apply a rule in somewhere in Arizona or Colorado or a limited state like Missouri or Arkansas, limited license state, it affects the way you want to advise your client. So I think it's really important to know what your client's goals are and know a bit about them and kind of sit in their, stand in their shoes.
So wait a minute, and Joe, I'll get to you in just a sec, because I would love to have you answer that question also. What I hear you saying, Curtis, it's actually a two-way street, is that the potential client, if you will, or the business person looking for accounting services comes in, they see you, you sit down, and it's really a process of seeing if it's a match. That
I would say very much so.
Yeah, that what they want is what, not only what you provide, but I think there's a little personality that goes into business relationships, and if you seem to communicate well and get along, but it does go both ways, doesn't it?
Certainly does.
Yeah, Joe?
Well, I mean, I think a good CPA or CPA firm has all the areas that you might need eventually. You might not need it today, but you're going to eventually need it. And Curtis's firm, my firm, you, Jeff, I mean, we can bring so many things to the table, except for tax on Jeff's side.
Yeah, I'm going to explain mine.
Just
keep his
hands off certain things.
That's okay. I personally don't do a lot. I'll consult on tax, but I've got tax people. This is what they do day in and day out. But I'll be involved in those consultations. But coming from a background of operations and I mean, I've worked in the bankruptcy arena, so I know what even though this industry does not have those protections, we know what the signs are when a company is heading down a wrong road. So having that background and experience, and just being able to talk to the client and have them ask questions or ask the questions for them, I think that's what makes a really good advisor, to the client.
That's a really good point. And the reason I was smiling a little bit with the comment is that I may not be a good CPA because my firm is different than Joe's and Curtis's. I don't have the ability to do taxes, and I don't have the ability to do audit work. And there's some other things that I can't do. So the real point is to ask, even though I have a lot of experience in cannabis, I'm probably not the best CPA on an ongoing basis or monthly as compared to either Frost or Beech Fleischmann. So that's an important differentiation there. We all have CPA and we all have firms, but the real point, as has been laid out by Curtis and Joe, is need to look at those services, look at how long you're going to grow, and decide based on your overall goals and objectives. That's fair to say, right? Well, what should a potential or a business owner, when they're looking for a CPA, we've talked about, some of the things, just expertise or in the industry. Is there anything else that maybe they would want to focus in on when they're making their decision on selecting a CPA? Joe, you want to try that?
Well, obviously, you said, experience is key. Just having operational experience, I think, is really important as well. I mean, we deal a lot in numbers, but until you actually get on site, and are working with people day to day, I mean, that's when you really understand how an operation works. I mean, I've done a lot of court appointments, where I've been brought in through the court, to run a business, and I could run that business for 2 years. And quite honestly, before I did that, the business was a bunch of numbers on a piece of paper. And yeah, you could interview management, you can understand how their business works, but until you actually get in there and do the work, now you really understand. And that's where I think the benefit, and a lot of the CPAs, Curtis, myself, we've actually been there, within the industry and have seen the day-to-day operations and been part of it to really focus on, hey, okay, stop for a second. There's probably a better way to do this. Let's put this, in a bucket where we're going to say we're going to enhance this process because we could do it better, or this process is really not good enough to be compliant. We're going to fix it right here and now. So I think those are the things people in the industry really have to look for. And also, coming from a background of investigative, analysis, where, I've done government investigations in other industries, so we know what to look for and what the government is looking for. And when they're looking for compliance, I mean, you need to be in compliance. So you have to have a CPA who understands what that regulatory environment is and what it means to be, what it means when they say you need to be compliant and mitigate your risks within this risk framework.
Interesting term, mitigate. We'll come back to that term in just a minute. I kind of like that. Curtis, anything you wanted to add on that, as put yourself in the prospective client's shoes, and what should they ask you?
It is interesting when I sit down with clients, regardless of what industry it is. I'll echo what Joe said. Having that practical experience really allows you to understand what the process could be throughout the day. A lot of businesses are different in the way they operate, but you could go in there, and it's important to know that you can go in there and understand what the process is, their industry, what their day-to-day looks like, so you can advise them properly. And that goes also even going to the auditors. So we have the auditors go in there and they understand what it is to walk into a grow facility or processing facility and understand what that manufacturing process is about, the timelines with it, what their industries, their expectations are, knowing that they're not shipping out of state, and knowing the environment. It's really just understanding their business and again, being back in their shoes.
Nice. I appreciate that. I want to ask a kind of a long question here, maybe for a moment, because accounting is defined, for anyone who doesn't know, as the language of business, which means that we take all these numbers, we put them into some sort of organized fashion, and hopefully it speaks to us. It tells us what the business is doing. And having said that, and we're talking about looking for a CPA, but my neighbor said that they've got a little bit of bookkeeping experience and they've really wanted to get into the marijuana business. Won't they just do, rather than hiring a CPA firm? That's sort of a question.
Joe, would you like to take that?
Sure. It's not the best approach. I'll answer it that way. Sometimes that might be what you need. You do need a bookkeeper. You need someone internally who can maintain the books and records of the company. If you've got one experienced in the industry and is familiar with accounting for the cannabis industry, then that's great. I mean, that's a great find. Ultimately, though, you do need a CPA to provide the oversight, for that individual to review the records that they prepared, to make adjustments, as needed, and to have that bookkeeper be able to reach out to you as a CPA to ask the questions they need to ask. So ideally, yes, it would be helpful to have someone on site, or internally to do that, but ultimately you do need that, basically the muscle behind behind those bookkeeping functions is the way I look at it.
Well, wait a minute. They say they do taxes too, and they're a whiz at it.
I'll say, I
Yeah,
agree
Curtis.
with, one of the things that Joe had made a comment on is that the bookkeeper can have a CPA to call.
Yes.
They can have that as where their support sometimes. Now, I will tell you, for a number of businesses in this business or anything else, there's a lot of just single store dispensaries that we can have too. They can have their bookkeepers keeping track of everything and keeping, everything going. But ultimately, once a month, once a quarter, the business owners usually rely on us to review or go in there and provide support to the bookkeepers. They're certainly valuable to keeping the books, and certainly there's an important part for that. But it's probably wiser to have somebody that they can call and look over something, and it can save you, more money. Certainly, you want to have that on the bookkeeper side, but I would caution you, if they're going to prepare your taxes for you as a business, to not have a CPA looking over that and advising you, probably not the best decision.
I would tend to agree, and what I do with some of my clients that have helped stage or start at the beginning is that, and they've said, I've got a bookkeeper, and my response typically is, well, let me help you set up your QuickBooks, the right accounts, the right procedures and things like that. And I throw out a word to them and I say, well, we need to establish some internal controls as it relates to bookkeeping. And I guess I'm going to say, what internal control, it almost sounds gastro. But is it because accountants always just want to take control of everything, Joe? But can you help us just, what is an internal control?
I am like the internal control guru. I love internal control. It's one of those things that, excites me in the morning. It's internal controls. But what is it really? It's a system of checks and balances is really what it is. So, and this goes for any business, any industry. It's basically putting a process in place or a procedure in place that allows some oversight function so that nobody can it deters people from running off and stealing money, basically, is what it does. But it safeguards the assets of a company. So for a cannabis company, you want to be able to safeguard your cash, your inventory, proprietary, products, information, that kind of thing. Well, how are you going to safeguard those things? You have to put procedures, people in place to be able to, provide some level of assurance that is being done. And again, using the word mitigate, mitigate the possibility of loss, of those assets.
Yeah, Curtis, did you want to add on there? You're very familiar with internal controls, that's for sure.
Well, we certainly are, and it's very important to make sure that the internal controls important for any business, but certainly this business, there's a lot of cash, high value product. that can easily be taken if it's not there. Segregation of duties is important, but for some of these operations that we have that are larger operations, multi-state operations, multi-unit, some of these entities are preparing themselves for acquisitions as well.
Yes.
And whether it's something that is to go public or being wrapped up in a public company, even more so than having the audited financial statements, which is important in a lot of areas, but some states it's not. One of the things that we're always seeing in the M&A side is their internal controls. What do they have in place? What do they need to put in place? They want to know that the assets are secure. They want to know that the inventory is what it should be, and that they have the people in place that understand those procedures already. So if you are a public company, you have these internal control audits, SOX 404 audits. If you're a company that's been expanding and hoping to be acquired one day, possibly by a public company, and this is something that continuously is going on, you might, what we do a lot of, and I imagine Joe does too, is help advise and put these internal controls in place as if a SOX 404 audit was coming in.
Right. I want to mention just a quick example of that for you that are just establishing a company and meeting with your friends or business associates to create a business. One internal control that you would want to start with perhaps is the same person who receives your cash or is in charge of your bank account is not the same person who signs the checks. Think about that for a minute. If you control the bank, if you control the signatures, if you control the bank statements and all of that, then you have the possibility or potential to misappropriate certain funds. I say it easier. And what your accountants would help you to do is to identify those places in your business where perhaps it takes two signatures, or when you hand cash off. And you're right, Curtis, when I first started with the dispensaries, it was all cash. Banks weren't around at all. And so we had our cash coming in. We had to pay all our vendors with cash. What I implemented by way of internal controls is cash could never move from one point to another without two people counting it and both signatures on every sheet of paper. So they had to count it twice, they had to initial it twice, and then cash moved. And we rarely, if we ever had a cash short, meaning where'd that money go, it was usually, $5 or $8 or something that was the result of that day's activities at the cash register. Internal controls, very, very critical. Joe, I want to come back on your point on business risk or some of the risks. And business risk is defined as excuse me, I got it right here. It adds the value to a firm, and it gives you, it's the risk of your financing, it's the risk of your operations in your business, your day-to-day risk, your competitors, things such as that. But Joe, when we talk about mitigating these business risks, what are you talking about?
So, I always give the example, the easiest way to understand this is a lot of times when I'm doing evaluation, in the cannabis industry or any other industry, an owner will say to me, well, I have a friend who has a dispensary or has a restaurant, competing restaurant down the block, and they got a business valuation and their business is worth $10 million. Why is mine only worth $5 million?
Mm-hmm.
And bottom line, and let's assume for a minute, their numbers, their revenues and expenses are exactly identical. So if the numbers are identical, it doesn't mean that the value is the same. So what drives the difference between, the client A who's worth 5 million and the one who's worth 10 is their risk and their level of risk. So the higher the risk of their, let's say, company specific risk, which could be maybe they don't have those controls in place, maybe they don't have those controls over cash that leaves them wide open to, losses. They don't have controls over inventory, so there's potential for loss there. As we see these different things and we identify them, our risk is going up and up and up. So the higher the risk goes, the lower the value goes. So, and that's how I always try to explain it to clients, is you want to bring that risk down. You want to mitigate it. So you want to bring it down for obvious reasons, but also it's driving the value of your business. It's driving the value for a potential investor. It's driving the value for a possible, acquisition target. You want to get those risks down. So you want to make sure your financials are timely and properly prepared. If they're not, we just added risk because, you don't have a handle on your finances, so your risk has gone up. So think of the investor. If I want to invest in a company and I'm going to put $5-10 million down, am I going to invest in a company or an operation that doesn't have any of these things and their risk is super high? Or am I going to invest in the one that has really low risk because they've really got their arms around their operations and are compliant and have timely financials and have a strong internal control environment? So that's the difference between the two companies and how it affects value. It's the risk and the risk to the investor for investing in your company.
Yeah, you're right. If you think about it in terms of two cars, maybe they both have the same miles on them. And car A has all the service records. They've changed the oil, they've maintained it, they've done all the safety things to make sure that car moves, it maintains in great condition. And car B has the same mileage, looks the same, and no service records. I'm going to call internal controls almost your service records. Here's how we maintain our business. I just made that up.
That's actually, I
No,
like
that's
that
a great
analogy.
analogy. That's a really great analogy, and it makes perfect sense, to everyone, because they look exactly the same. And if you're the buyer or the investor and you're not doing your due diligence, maybe you don't care. Maybe you don't really care. You just want that car. I just want it to sit on my driveway because it'll look really good.
Yeah.
You don't care how it runs, then the value is there for you and we don't care about the risk. But if I'm going to be driving that car around, I'm worried about the risk involved with it. And I'm going to definitely go with the one that has the records. So.
Absolutely. And, even if it's not for an external investor or not for a potential buyer, and you have this is going to be your job, is your business, and you're getting into this business, you're going to have to remember that there's compliance matters, especially in the cannabis space. And you want to make sure that you are paying your taxes the way you should be and appropriately, that your financial statements are going to be accurate and timely, because these are required for the state of Arizona. And if you don't have these, you could be risking the loss of your license or suspended license or something. And that in itself, you want to make sure that somebody or you are guiding yourself in that way with all these, they're nuances almost, but necessary for operating the business. You have them in restaurants, and you have your payroll taxes, you have your sales taxes. But the cannabis industry is several levels above that for regulatory purposes.
Everybody has their knife sharpened in the governmental arena, meaning the IRS, the Arizona Department of Revenue, the Arizona Department of Health, because they check your compliance on an ongoing basis. So I don't think you can underestimate preparedness or undervalue preparedness as it relates to your compliance and your accounting and those things. If you want to have or do your own accounting and you're going to bring somebody on, that's terrific. That works very well. But bringing in some expertise, a second opinion to help guide you is really critical. You'll save a lot of money in the long run.
Spend some time on some strong standard operating procedures, SOPs,
Yeah,
a lot.
SOPs.
yeah.
They're fun. You know, I'm going to shift gears just for a second and move to taxes. We're not going to go too deep on taxes, but if I'm a new guy, I'm trying to come into this business real bit. Where can I go to become a quick study and an expert on the taxes and tax issues? Joe?
I would say go back to school, get an accounting degree, take the CPA exam, and get some years under your belt before you do that. Quite honestly, I don't even do my own taxes because, like Jeff, like you said before, it's ever changing, and that's just, I don't concentrate on that area as much as I do everything else. So in my opinion, leave it to the people who do the work the best. So anytime I've got any tax issues, I bring it right to my tax people. If I've got audit questions, we go to the audit group, within our cannabis group. So, that's the key. I don't think when you're a business operator, and this goes for every industry, I see this a lot in healthcare as well. The doctors want to try to do it all, but do what you do best and leave the rest to everyone else. Yes, does it cost money? Yes, but in the long run, you're going to have a super successful operation when you've got the right people in place who know what they're doing in that particular area. So, and then know what you can and cannot do. If I can't do something, I'll find you somebody who can do it. I've had people ask questions about banking and insurance and different things like that. And, all of us have expertise in this industry and we know a lot of people. If somebody called me and said, hey, Joe, do you know a lawyer who could do this? Absolutely. Do you know an insurance person? Absolutely. I would never talk about those areas because they're not my areas of expertise. So,
Right.
you need to go to the right people for the right job to be successful.
Really, really great point. Curtis, did you want to add something?
I agree with Joe. Now, in a lot of that, what you don't know that we have resources to be able to call somebody up. I actually just got an email today from somebody who asked if I can't help with, they're getting audited by the IRS, do I know somebody who can? So
Right.
trying to find somebody who can for them. And this is actually not in the cannabis business, but the industry, but another industry, but that's exactly right. Now, if you are already an established accountant, tax accountant, and you're trying to get into this space, there's certainly reasons to do so. There's a lot of work in this space, but you be careful about just what the research is online. It's an ever evolving. In the 10 years I've been in this business, there have been a lot of changes in the advice you would provide a client in this business to address 280E, and whether it's how you're going to structure your business as an LLC, a C Corp, an S Corp, to understand what that means in this, and particularly in this business. Because I will tell you, there are structuring matters that might work better in other industries that are not the right structures for this industry. So be careful of where you go. And I'll tell you, when I first got in this business, there was another accountant that I worked with. I really worked with this one company, and this other more experienced accountant that had been doing it out of California and everything for a few years earlier was on retainer and would provide me with advice. And as I came and grew and got more clients, it becomes more experience in this. But there's certainly a place to do so. Just be careful of just learning something online for it.
So I want to pick up on your statement of structuring certain things. And you threw out a 280E term, and some of you may have heard that, some of you may not. But 280E is the tax code from the IRS. that prohibits businesses from deducting certain expenses in the marijuana business, I should say. So in the marijuana business has some very, very unique rules. And as Curtis is pointing out, structuring means having someone look at how you build a building, how you value or record your inventory, how you record expenses. It's easy as a bookkeeper to say, I have a bill from the utilities and they enter it into QuickBooks. It's different in the cannabis world as to what you do with that utilities invoice. And I think that's the expertise that I really want to emphasize here, is because both firms do taxes with the emphasis on 280E. Curtis, I sort of brushed on the definition of 280E. Would you like to explain or give a quick overview of your perspective on 280E?
Sure. Just as you said, 280E really means you can't, cannabis business can't take deductions of certain expenses, which other than your cost of goods sold, for federal tax purposes, this is really just federal we're talking here, because most states that have it legal allow these deductions. What you have to be careful about is dispensaries operate very differently than a cultivation facility. And to understand how you classify items in cost of goods sold to take that, there are very different rules. The IRS spells them out for you too. So a vertical operator has more opportunity to absorb more of those costs into their cost of goods sold and inventory, whereas just a dispensary may not. So you just have to be careful on what you're trying to do with that. You'll have a lot of accountants out there providing a lot of different advice and strategies. And this is again where I think you have to be very careful to not fall in this one rule fits all category. It means your risk tolerance, if you're going to go with an aggressive strategy to help mitigate this 280E, whether you don't have that risk and you want to make sure you're careful, there's a good chance you'll be audited by the IRS. I think you'd be prepared for that. Keep your books and records very, very, very strong. And whatever you do, just make sure you're recording your policies and procedures and everything that you have in place. And it is going to be a documents audit, and that's what you got to be careful of.
One thing I wanted to add to that, and the bottom line to the 280E situation is that operators have to really pay attention to their cash flow, right? Because by not being able to deduct all these expenses that a regular business would, rent, and, all these different things, basically your taxable amount is much higher. So now you're paying taxes on a much higher amount. So you've got to really pay attention to that cash flow that you're generating, because you're going to have a much higher tax liability than a company in a different industry would have. So that's really the result of the 280E. And until that changes, you really have to be prepared for that. And then with respect to the audits, IRS or Department of Revenue, it's not a question of if, it's always a question of when. So don't think you're going to get out of an audit. You'll eventually be audited. If anything, I think within the industry, I think the cycle is just going to be faster in terms of more frequency of audits than you might see in a different industry. So I think to get started, you're going to probably, if you have an audit, you might see one come up even sooner than 5 years or 10 years or whatever it is their normal turnaround time is for an audit. So knowing that, you want to make sure, like Curtis said, you want to make sure everything is in place to be prepared for that.
And I just want to say, Josephine, on that, when you said cash flow, it just, sorry to jump in, but triggered something that happens with a lot of businesses that we have with taxes that are LLCs, taxed as partnerships, the cash flow item is very important to remember. Sometimes people don't understand that your income isn't necessarily the same as what you're distributing to yourself from that business. And so not deducting a number of these expenses and say you distributed yourself $100 because that's what the cash you had in hand for the business and that's what you thought. You're not taxed on that $100. You could have a taxable income of $120. So understanding that cash flow, what that difference is, and being prepared for that is important, and planning for it. And that's where you should really have regular communication with your accountant to say, where am I with this? Where am I on our taxes? And where am I for distributions? Where is that?
That's a great point, Joe.
Yeah, I want to, one thing I always, push for clients is having that budget process in place. You really want to have a budget. You want to look at that budget periodically and compare it to actual results and see why did I go over here? Why was I under here? You really have to pay attention to that cash flow. I mean, we do that, unfortunately for companies that are heading toward that insolvency zone where, they're heading down a bankruptcy road, we back engineer the analysis to say, oh, they would have realized had they looked at this, their cash flow on a weekly basis or whatever it might be, or a daily basis, they would have seen the red flags come up and they would have realized what they had to have changed to not get to that end point. So, it's really important to monitor that.
That's a great point. Actually, you bring up a very important, I'll call it added value for anyone looking for CPA is those projections. What that really means is accountants are pretty good at looking into a crystal ball, pretty good, not absolute because nobody can, but that's important for you to be able to identify, well, when are we going to run out of cash? How much cash is there? And to help you make those decisions with regards to purchasing more assets or just paying folks. Curtis brought up a very good point in that what the partnership reports as income may not be the same as any cash you get paid. It's sort of like your W-2 somewhat. You have your gross earnings and here's your take home. And with your partnership, those may be some big gaps, but you're still required to pay taxes on the gross amount. A little bit of caution there. Okay, we've covered a lot of things today. We've discussed CPA firms, the importance of selecting a qualified CPA, the importance of having a CPA, and some of the things to think about as you're formulating your business, creating good internal controls, and having a great relationship with your CPA. And I want to thank Joe and Curtis for joining us. And Joe, if you'd like to have some, I'll call it parting advice to our panel or to our audience, that would be great. And then Curtis, if you'd follow, please.
Sure. I would say, surround yourself with professionals who are knowledgeable of the industry, who are knowledgeable in their area of expertise, obviously, because having that group around you will only make you stronger and you're more likely to succeed with that. So a good lawyer, back to the good lawyer, the good CPA, to me, those are key professionals within this industry. A good insurance person, because, we haven't even touched on any of that, but there are so many risks involved, from an insurance standpoint, having the right insurance professionals in place as well is super important. And have fun. This is a great industry. It's ever changing, but stay knowledgeable of what's going on, not just here in Arizona, but in every state. Just pay attention to what other states are doing as well, and what's going on the federal level from a banking standpoint, from a legalization standpoint, just stay on top of it. That'll just make you a stronger operator.
Thank you, Curtis.
I agree 100% with Joe. And just remember that, you know, you surround yourself with these people, they're part of your team, and they're here to help you in any way. There is a lot of benefit to those of us that are in the industry, that we get to work with enough businesses that we can see things as well, that from other businesses that help you operate better. And that's what our goal is, to help everybody operate as best they can. We're there as part of your team, and we have resources available as well. So we know people, if it's bankers, insurance people in the business, other accountants that can do something that we can't provide for one reason or another. Just remember, having those people around you will really be a benefit to you.
Thank you. It's, as a parting shot, it's very important, I think, or just an incredible value when you have a CPA experienced, as we have with our panelists today, that have seen your kind of a situation and have that ability to move you along more rapidly. And I can say from all of us as CPAs, if you're making money, we're all happy. That's the best part, right? You see the big smile. CPAs do smile, don't they?
Yes, we do.
That's awesome. All right. Well, thank you so much. And I look forward to hearing from you again on another panel.
Absolutely.
Thank you,
so much,
Jeff.
Okay. Take care.
Thanks, Joe.
Bye-bye.